On that note, viewers, time to slip into a very short break. And on the other side, we'll keep the market chatter going. So stay tuned and we'll be right back.
Well, that's the holiday over.
Thank you!
When you fly Emirates, your holiday isn't over until your flight is over.
Well, that's the holiday over.
Thank you!
When you fly Emirates, your holiday isn't over until your flight is over.
She provides you with overall outlook of market coverage. With her keen eye for detail and an expertise at insightful interviews, she brings clarity to the stock market and beyond. Ankita Saxena, only on ET Now.
From anchoring live sessions to breaking down earning reports, navigating the market moves and analyze numbers that matter. Going beyond management soundbites, asking the real questions to get you the real picture. Whether it's catching big news as it unfolds or reporting live from major events. I'm always where the action is. With a sharp focus on technical analysis, I help you analyze the market trends and their likely impact. My mission? To keep you ahead of the curve. Catch all this and more with me, Srishti Sharma, only on ET Now.
From bullion to barrels, steel to sugar, every commodity tells a story. They move economies. Behind every price swing is a signal that matters to you. Gold, agri, oil, metals, every tick has a trigger. From big macro shifts to micro market moves, we decode the chaos so you don't have to. Join me, Ashesha Advaryu, as I make sense of global commodities on Commodity Central, Monday to Friday, 1 p.m. only on ET Now.
From tracking India's consumption sector to decoding the biggest market trends, I connect the dots. Don't wait, and neither do I. Catch me, Snehal Shah, from Monday to Friday on ET Now.
From the heart of India's financial capital, decoding the forces driving the economy.
Hello, welcome back. You tune into Markets at Noon, where we're getting you all the action from the market. And now we are joined by Sachin Shah, who's the Executive Director and Fund Manager at MP Investment Managers, to talk more about the markets and how should we really look at the market. Hi, Sachin. Good afternoon to you, and thank you so much for joining us today. Sachin, firstly, off late, India has been outperforming the rest of the markets. In fact, there has been a bit of a cool-off that we've seen on Wall Street. Especially, there has been a lot of chatter about the AI bubble and the drawdown in the AI stocks. Could the FII finally make comeback to the emerging markets because of the slowdown in the US markets, and therefore India could be a net beneficiary? And now in the second leg, India perhaps can start outperforming the rest of the world because we have been net underperformers so far.
Yeah, I think, we have to see in the context how did India perform in the previous calendar year. I think we really outperformed most of the global markets. And probably in this current calendar year, probably we are kind of consolidating. So I wouldn't read too much into we underperforming, significantly in this year or something like that, because I think important is to look at over 2 years, 3 years, 4 years. I think over that period, I think we've been doing fairly well compared to most of the global markets, including the US markets. Also, I think we have to see from a perspective that we have a lot of new issues, primary issues coming up in this particular year, which is also absorbing decent amount of liquidity. That's why probably in the secondary markets, you may see that there's not so much of movement in terms of the price changes. But I think if you see the overall market has been expanding significantly with so many new company listings happening. So the overall total market cap of the country is definitely expanding quite significantly.
Okay, so that sounds good. Sachin, hi, good afternoon. Also give us your sense on your reading about the earnings season gone by, and after that, have you made any changes to the portfolio or any way that you view a particular sector? And let's talk about IT. Any change in your stance on IT?
Sure. So coming to the earnings season, I think the earnings season has been pretty decent. In fact, it's been much better than anticipated, or I would say feared by most of the market participants. So I think overall earnings season has been very good. Second, even more important, that thanks to the GST cards, thanks to the good monsoons, I think the management commentaries for the second half of this year is even more promising. Coming to the overall our portfolio allocations. So I think for the last few quarters, we have been significantly overweight on autos, and which has really helped us quite a bit thanks to the last quarter. And even now, you can see the kind of the retail reciprocation that has happened from the retail customers for the auto vehicles, whether it's two-wheelers or four-wheelers. I think that's been very, very promising. The other thing where we are very positive is clearly the private sector banking, and even over there, the leaders have delivered very, very decent results, and the valuations are very, very reasonable. Coming to the IT sector, I think, in fact, I've mentioned probably a few times on this channel itself and otherwise also, I think for the last more than, I would say 12 to 18 months, we have been significantly overweight on this sector, and which probably has been some bit of a contra call, but it has worked out quite well for us in the last few months. What we believe there is that first, clearly the valuations are very, very reasonable. The risk reward ratio is very favorable to long-term investors. Second, I think we also believe that strong order book that they have received and that execution cycle should probably now take pace over the next 12 to 24 months.
Right, Sachin, you mentioned about the auto and auto anchs, but besides that, are you seeing value in the consumption basket? Post the GST rate rationalization and perhaps consumption to now pick up, are you seeing value in the consumption basket, albeit the discretionary end of consumption? And if yes, then what would be those pockets?
Yeah, sure. So, again, there one will have to be a little selective because like auto stocks were available at very, very reasonable valuations before the GST announcement, which happened around the 15th of August. So before that, if you see the valuations of most of the auto stocks were very, very reasonable, particularly the OE companies. I think in terms of the other consumer companies, I think the valuations, again, I think it's a mixed bag. Because if you see some of the leaders in the paint industry, they had the valuations had become reasonable, and when they started delivering some decent results, I think we have seen some uptick there. But not necessarily that's true for all the consumption stocks. So I think it's a mixed bag over there.
Okay, and Sachin, just moving away from the secondary market for a bit, given the kind of new paper we are seeing in the market, have you been looking at anything at the primary market, given the surge of IPOs we've been seeing, anything looking attractive over there?
Well, we are actually very long-term patient investors, and for us, it is also very important that we be patient before investing. So generally, whenever new listings are happening, we wait for at least 3 to 4 quarters of results post the listing, and that's when we actually start seriously evaluating some of these businesses. So, for example, we own a large logistics company which is Delivery, but we bought into it very recently, almost 18 to 24 months after the listing. Similarly, when we invested in Eternal, or earlier when it was known as Zomato, it was also after almost 12 to 18 months of the listing. So we generally have a little different strategy when it comes to new listings. We wait out for at least 3 to 4 quarters of results post the listing.
All right, Sachin, on that note, thank you so much for taking the time out and joining us and weighing in on the markets. We'll let you go on that note and move on to an ET Now exclusive then. The government is likely to table the Insurance Laws Amendment Bill in the winter session.